Ladies and gentlemen, good day and welcome to the Q3 FY21 earnings call of Symphony, hosted by Emkay Global Financial Services. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions at the end of today's presentation. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Naval Seth of Emkay Global. Thank you, and over to you, sir.
Thank you. Good evening, everyone. I would like to welcome the management and thank them for giving us this opportunity. We have with us today Mr. Achal Bakeri, Chairman and Managing Director, Mr. Nupesh Shah, Executive Director, Mr. Bhadresh Mehta, Global CFO, and Mr. Milind Kutecha, IR and Treasury. I would now hand over the call to the management for their opening remarks. Over to you, gentlemen.
Thank you. This is Achal Bakeri here. Good afternoon and welcome to all the participants. We really appreciate your being here and your interest and participation in this call. I'll request my colleague Nupesh Shah, the Executive Director, Corporate Affairs, to take us through the results. After that, all of us will respond to the Q&A. Over to you, Nupesh bhai. Thank you.
Yeah. Thank you, Achal bhai. Welcome all the participants to December quarter Q3 and YTD financial review. Usual disclaimer statement applies. To start with, we'll take you through some major financials for the quarter and 9 months, standalone as well as console. So for the December quarter on a standalone basis, revenue from operations stand at 124 crore versus 207 in December 19, that is down by about 40%, while on a console basis, for 9 months it stand at 561 versus 854, down by about 34%. On a standalone basis, gross profit margin stands slightly in excess of 49%, in fact 1% improvement YOY as well as Q2Q. EBITDA margin percentage is at about 34% versus 30% in September quarter, that is improvement of almost 4% Q2Q. At PAT level, it stands at about 35 crore versus 27 crore in September quarter and 58 crore in December 19. And PAT percentage stands at 26%, about 3.5% improvement Q2Q and almost in line with December 19 quarter. And on a console basis, PAT stands at about 44 crore for 9 months versus 142 crore. In terms of the capital employed, for the quarter on a standalone basis, it is negative by 3 crore, again proving the efficacy of the asset-light, capital-light business model. And treasury stands at about 557 crore. In terms of the PBIT percentage on capital employed, on a standalone basis for the quarter, it is infinite in line with December 19 quarter and also September 20 quarter. While on a console basis, it stands at about 144% for the quarter. In terms of the revenue breakup, for 9 months, about 257 crore has been generated from domestic sales, while 304 crore from rest of the world, including sales by subsidiaries and exports from India. So almost 60% of the sales has been generated from rest of the world. And happy to inform that despite COVID-19 challenges, despite challenging summer and lockdown, on a console basis, there is a reduction in the inventory from 105 to 99 crore, while on a standalone basis, it stands at 36 crore. So there is absolutely no overstocking at the level of the company. In fact, in some of the models, considering the collection received during the quarter, there has been a stock out position. Coming to subsidiary company specific details, in Symphony EU, that is climate technology, for 9 months, the top line is up by 1%. However, profitability is impacted on account of higher input costs, local purchases instead of imports, and increased freight costs, and also the labor costs. But now, considering various initiatives which we had initiated in the past, in March quarter, it seems to be a turnaround quarter in terms of the business model, cost rationalization, as well as revenue optimization. For Inco Mexico, sales is impacted during 9 months due to COVID. However, there is an improvement in gross profit margin percentage as well as contribution margin percentage on account of various initiatives. About GSK China, again sales is impacted due to COVID, but there has been improvement in gross profit margin percentage as well as contribution margin percentage. As of now, we are witnessing very strong trade sentiments across the market, including rural as well as semi-urban demand. In fact, in December quarter, YOY, the trade collection was higher than December 19, and it was more than our own internal estimate and expectation. And on account of higher collection, and also due to certain supply chain and production constraints, there has been good amount of unbilled sales which will be billed in current month and current quarter. There has been substantial increase in input costs, mainly plastic as well as metal. However, as mentioned earlier, there has been slight improvement in the gross profit margin percentage, and we are confident to maintain it on account of launch of series of new models during the year as well as last year, good model mix, and also on account of operating efficiency as well as robust cost rationalization, and also some price increase across the board. So with this, we open the floor for question answer. Thank you.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Manoj Gori from Equirus Securities. Please go ahead.
Yeah, thanks for the opportunity. So a couple of things you did highlighted that there would be some, there were some unbilled sales that would be accounted
sorry
during.
to interrupt, sir, we are not able to hear you clearly. Can you use the handset mode while speaking?
Yeah, is it better now?
Much better, thank you.
Yeah. So you did indicated that there were some sales which would be accounted during the current month and next month. But just wanted to understand like whether there was any pre-buying that could have been possible during the current quarter, given that there are risks for the price increases and many of the other categories did witness some pre-buying. especially in the cooling product categories. So any light on that?
So are you referring to pre-buying that could have happened in the before December?
Yeah.
Well, not much, because our price increase indication was given very late, so it wouldn't have really affected our booking in December. And if the price increases have been basically made effective 1st January, and it was not declared beforehand that we are going to be doing that. So it couldn't have been significant. Most of the collection had come much before that. Orders had come much before that.
Okay. So, if you can quantify, what would have been the blended price hike that we would have taken?
What would have been the
blended price hike?
Blended price increase.
Well, blended price increase, again, it varies from model to model again, and we would not really like to get into that for comparative reasons. So, so that is something which is, it varies.
Right. So on subsidiary part, if we look at, obviously the sales have improved on YY basis, but again, when we look at the EBITDA level, there was some pressure, and especially even on the gross margin front. So can you throw some light on that, and what would be the future outlook on the same?
I think Nupesh Bhai already explained. Maybe Nupesh Bhai, you can reiterate.
Sure. So EBITDA margin percentage for subsidiaries, one in climate technology and secondly in IMCO, have been impacted, especially in climate technology, one on account of local buying instead of imports, also substantial increase in the freight cost and labor costs on account of COVID-19. But now we have resolved those issues, and on account of various initiatives, starting March 21 quarter itself, we should reap the benefits, and we are expecting March 21 quarter to be a turnaround quarter for climate technology. As far as IMCO Mexico is concerned, gross profit margin percentage and contribution margin percentage has seen an improvement. However, there has been provision for the bad debt of about 7.30 CR because one of the large organized retailer went bankrupt due to COVID. And hence, EBITDA has taken a hit over there.
Sure. That was very helpful. Thanks a lot and wish you all the best.
Thank you.
Thank you. The next question is from the line of Manish Agarwal from Edelweiss Broking Limited. Please go ahead.
Hi, sir. So two questions from my end. Firstly, on the domestic inventory side, if I remember correctly, last quarter we had mentioned that around 40% of sales is with channels. So basically, we mentioned that our inventory is almost, has been drawn down quite a lot. So any commentary on what would be the trade channel inventory as of our domestic market? And so the second question is on the gross margins for climate technologies. So you definitely mentioned about, the issues about the import restrictions and everything, which is impacting the gross margin. So, sir, has the import restriction been eased out there, or, so that we can expect the gross margin going back to the earlier levels, or it will be just something like an internal value engineering in the near term?
So as far as climate technology is concerned, it was more about import availability of imports because of supply chain issues. There were no freight coming in, or rather no containers coming in from China. Everything was locked, so we had to either air freight components or buy them locally at several x the cost. So that was the question was about first question was, sorry, the inventory. Correct. The inventory is will not have been liquidated by now. That will start happening sometime from next month end onwards, because the summer has not arrived yet and consumer offtake of coolers has not begun yet. So inventory, in fact, would have increased because of the additional sales or purchases from the company by the dealers.
But to give a different perspective in respect of inventory, of course, as on 30th June, that is end of the season, trade was left with 40-45% of inventory. But as there has been a reduced offtake by the trade during September and December quarter, so if we compare the total trade inventory as on 31st December or estimated trade inventory as on 31st January 21, YOY it will be in line with or slightly less than what it was as on January 20 or even January 19. Because earlier years also, trade used to lift during September and December quarter. So end season trade inventory is more than offset by reduced offtake by the trade during these 2 quarters.
Okay. That is very helpful, sir. Thank you.
Thank you. We'll move on to the next question. That is from the line of Onkar from Sri Consultancy. Please go ahead.
Yeah, as you have been seeing that instead of rising sales from your subsidiaries, there has been quite a lot of pressure on your consolidated profit and loss statement, and standalone has been better. So what do you think about the performance of the subsidiaries going forward?
Yeah. So we already answered that. So one was a major question mark on climate technology. But starting this March 21 quarter itself, one is further improvement in top line as well as substantial improvement in bill of material and various other costs. We will witness the improvement, and in fact March 21 quarter itself is expected to be a turnaround quarter. Not only that, on account of climate technology, we have got a market access to US as well as Australia, and larger shipments are expected to materialize from Symphony India to both US as well as Australia. We have already the confirmed orders. In fact, some of those were expected to be billed in December quarter, but due to non-availability of containers, we could not bill. But in current quarter, they will be billed.
Yeah, what about the rest of the subsidiaries? Do you think?
Also, on in continuation, I think we must also recognize that there will be margin that Symphony India will retain on all the business that it sells, all the coolers or export that it does to its subsidiaries. So that margin would not have been generated if the subsidiary did not exist. So while we look at the subsidiaries' performance on a standalone basis, in reality, we have to look at the whole thing in totality. As we had explained once in our, I think in our previous quarter conference calls, that our subsidiary in Mexico, which we had acquired about 11 years ago for a little over 3 crores, has over the last 11 years given us a cumulative total net profit after tax of over 100 crores, or 111 crores to be precise, and generated turnover also of about $110 million in the last 11 years. So now this profit I'm talking about is the end-to-end profit. Now, had this company not existed, this profit would not have also existed. So we have to recognize that there is margin that Symphony retains. So as Bhupesh Bhai said, these acquisitions have provided us access to those markets, and so there is margin that Symphony retains and then sells to the subsidiary, which in turn sells in their local market.
Okay,
talking about the other subsidiary.
Yeah.
Yes, carry on, Bhupesh Bhai.
Yeah, so about other subsidiary for INCO as well as GSK, as I said earlier, YOY there is a degrowth in top line on account of COVID. However, we have succeeded in improving the gross profit as well as contribution margin percentage. and in IMCO we would have been positive had it not been the provision for the bad debt. In GSK China, the year has not been good, and in fact last year itself, that is in 1920, we have already made the provision for impairment of equity as well as goodwill. However, down the line we are optimistic not only financially, but there are many strategic benefits due to China presence.
In fact, even if you consider the trajectory before COVID hit, up to 2019, March 19, the whole situation was very different. In 19, our sales had begun to improve over 18. 18 was higher than 17. We had broken even on a cash basis in 2019. Had COVID not hit, by 20 we would have had higher sales and certainly had turned a profit, and so too in 21. But so the direction was already there towards higher sales and profitability in China, but because of COVID, the curve changed once again. And of course, in Mexico, we have already explained that it was primarily because of one company going bankrupt, one major customer going bankrupt. Otherwise, the company would have still had a small profit. And on top of that, of course, the net margins that Symphony has retained in India for the exports that it has done to Mexico.
Okay. The second question is on what has been the performance currently, and what would be the performance going forward for the industrial segment? And just to add to that, what would you be doing in terms of the cash which you have currently? Thanks.
Okay. For the industrial segment, again, we are not disclosing the information separately about what is the sales, but it is not a significant sales is what I can tell you. But last year we had introduced the Made in India range. Before that, we were importing from our subsidiary in China and Mexico, but it was only last year that we began introducing in India. And it was supposed to have been, it's a sort of breakout year. But again, because of COVID, the whole thing got pushed back. And in the current summer, we will be launching a marketing campaign for the industrial and commercial coolers. And, with that, the situation should be, significantly different. But even now, what we are witnessing is, significant change in the direction. And sales of these coolers is much better than it was in the previous years. It's a matter of accelerating that trend, which we will be attempting to do with our marketing campaign. And about cash, we have declared a small dividend, which you may have seen. Of course, we will continue to pay dividends. Other than that, we have no other plans. We have no acquisition plans. We don't even wish to acquire, make any acquisitions in the foreseeable future. So apart from dividend, there will be no other avenue for deploying the cash. And our business model, as you would know, is such that it doesn't really require us significant capex for us to grow.
In between, there were some.
There is a stated payout policy of 50% of the PAT, and that will be maintained as it has been in the past.
Just ask because there were some talks earlier regarding buyback and all, which you had talked about.
Yeah, so in 1920, as such, we had passed enabling resolution of buyback. However, later on, income tax laws changed. So instead of buyback, in March 20, we declared special dividend, and I think the payout was in excess of 100 crore. So instead of buyback, we paid out through special dividend in March 20.
Yeah, so the resolution for buyback is out of the way now. It's not there.
Down the line, we may consider, because again, they have changed the income tax law. So ultimately, it's a question of the payout in the form of dividend or buyback or combination of both. So we are not ruling out. Ultimately, there will be now 50% payout.
Okay. All right. Thank you.
Thank you. We'll move on to the next question. That is on the line of Achal Lohade from JM Financial. Please go ahead.
Yeah, thank you for the opportunity, sir. My question was in terms of the demand scenario, if you could, comment. I don't know if you've already covered that aspect, but how are you looking at in terms of the demand? Because in one of the remarks you said you have faced certain stockouts in certain models. So just wanted to understand in terms of the demand, if one has to take a perspective for next for this season, how do you look at this situation? Not compared to last year, because last year we had kind of a narrow washout, but if I compare from a 2-year perspective, sir.
So the demand, I would say, is fairly robust. The sentiment is very, very buoyant amongst our among our channel partners. In fact, not only the channel partners, even at the end consumer level, right after Diwali, during the period, the wedding season, there was, very, very good sales in certain pockets, running into, several thousands of coolers, in certain pockets, specifically for the wedding, despite the fact that it was peak winter. So the sentiment is very buoyant, the demand is very robust. So at that level, we see no cause for concern. In fact, we are quite optimistic and very positive about the way things are unfolding. So going forward, and there are also indications of an early summer. It's expected that February should be a fairly hot month. So we are, really poised to sort of harness, whatever the market has in store for us.
Right. And in terms of the supply chain, are you how much of the sales is actually in-house? I would imagine bulk of it is actually outsourced. So could you please comment in terms of the mix and any issues you faced in terms of supply chain? And are you also seeing your competitors in the organized as well as unorganized facing supply chain issues?
So first of all our manufacturing, there's no manufacturing that happens in-house. It's 100% third-party manufacturing. And yes, we have witnessed supply chain disruptions, and first because of COVID during those months, then of course subsequently even our imports are constrained by supply chain issues. Internally too, availability has been an issue. Exports has been an issue. Many of our shipments which were supposed to happen in December have been deferred, are going now. So there have been a huge supply chain disruption, not only in India but across the world, and that's affected us as well. Then to top it all, you had the farmers' agitation, which also choked, all the supplies going in and out of NCR, and a majority of our local, purchasing or sourcing happens in the NCR region. So there have been, everything that could go wrong in the supply chain perspective has gone wrong, not only for Symphony but for the entire industry. But our people have been resourceful and have been managing to the best possible, and we have not really, I would say, allowed much of, loss of sales. Maybe some has deferred, sales has deferred, it's happening now, but there has really been not led to any loss of sales.
How much would be the
year as a whole?
So
year as a whole for March 21, whatever issues were there on account of supply chain or even delayed billing, that will be taken care, and year as a whole we don't expect any loss of sales on account of them.
Moreover, most of the other players in this industry, they begin their manufacturing much later, around now, or around December, January, whereas we keep on manufacturing around the year. So we, to that extent too, we have been able to prime the channel as well as we have been able to do it in previous years. And that same may not be true for other players in the industry.
Understood. How much of our products are imported from China? What is the mix?
No. Products are not imported. Some components are imported. Some components.
Understood.
But even for those Chinese imported components, we have made the standby arrangement, and that too at competitive cost, to procure locally.
Correct.
Not only that, even for supplies to Australia, starting next year, some of the local production that is in Australia, what they used to procure or they used to procure from China, for that also we have organized outsourcing from India, and starting next year, even for climate technology, there will be a substantial supplies from India, which will not only improve supply chain, but will also should substantially add to the exports from Symphony India and also add to the profitability. And it is likely to be, in terms of the profitability margin, in line with our domestic sales and also exports to rest of the world.
Understood. That's very helpful, sir. Thank you so much.
Thank you. The next question is from the line of Simran Bhatia from S&P Global. Please go ahead.
Thank you for giving me the opportunity. Sir, I just want to ask, because some of the questions have already been answered earlier. I was seeing your EBITDA margin trend. So I just want to ask that, when we can see means sort of upside in the EBITDA margins from the days of 19%, at least, which we used to enjoy earlier. Not beyond that, but at least, close to 18-17%, any timeline or this margins have been bottom out, or it's still to be, or it will remain flat going forward?
See, EBITDA margin is purely a function of what is the gross profit margin percentage or contribution percentage, and a function of the top line. So on a standalone basis, as far as contribution margin percentage or gross profit margin percentage is concerned, despite COVID-19 challenges, despite end of season inventory lying with the trade, we have not only maintained, but we have slightly improved the gross profit margin percentage. And that too, in current quarter, there has been production for which there has been substantial higher input cost. So after accounting for that, we have maintained that. About reduced EBITDA, again for the quarter, EBITDA percentage margin is in line with the last year. However, it could have been even better had we maintained the top line. So it is the function of about the improved sales, which should happen down. And as far as subsidiaries and leading to overall console gross profit margin percentage, as we said earlier, in climate technology, this March 21 is going to be a turnaround quarter, and hence it should improve starting March 21 itself.
Great. And sir, the demand which we are seeing in the market, what's your sense is that it is more of a pent-up demand going on, or sort of it's a robust demand we can see going forward based on the cash flows of the consumers, or is it just a pent-up, or it's just a transitory means it's just for a short time? Means what's your sense is in the market, because in the newspapers we are seeing the different articles day by day. Sometimes it is good, sometimes it's bad. So it's keep on fluctuating from the past 5-6 months. So what's your sense is that that the means about the this demand by the consumers?
So as far as secondary...
Yeah, go ahead, Nupesh bhai. Complete.
Yeah, so as far as customer sales or secondary sales is concerned for air cooler, most of the sales happen during the summer. So to what extent there will be pent-up demand, we will come to know starting next month. However, trade sentiments across the geographies are quite robust and quite confident. And hence, in December quarter, unlike earlier 2 quarters, there has been also robust collection.
Okay.
And current trends as well as the estimates seem to be quite positive.
And if we talk about the overall sentiment, not only coolers but the general sentiment, then it is, I would say, very buoyant, and it doesn't appear to be transitory. It appears to be stemming from a certain, I would say, confidence, in the present and in the future. So I would say that overall, the economy, I think, is doing very well at the grassroots level, at least. We do not know what gets reflected eventually in the numbers for the country, but the overall sentiment is, I would say, fairly buoyant.
Great, sir. Great. It's a great thing to listen from your end. Thank you, sir, and all the best for the future, and have a good luck. Thank you, sir.
Thank you very much. Thank you.
Okay.
Thank you. The next question is on the line of Ronak Vora from Om Advisors. Please go ahead.
Hi, sir. It's been a good quarter and the recovery has been pretty good. So can we say in the quarter 4, the sales have at least beaten down what we were in March of 19? Hello?
Yeah. So, repeat your question. Did not quite get it.
So what I'm trying to understand is, can we say that in the coming 2 quarters, which are our main quarters, say the March and the June quarter, can we say that we will beat down the previous high levels of March of 19, like the ones that we had in FY19?
Yes, go ahead, Nupesh bhai, you were answering.
No, so right now all indications are very positive. It should be certainly better than March 20 on a console basis. To give a precise comparison vis-a-vis March 19, it is slightly premature, but we are quite optimistic.
Okay. And from when do we see all our subsidiaries, say INCO, GSK and Climate Technologies, to be at least contributing to the bottom line of the company? Because that is where we are really facing issues since the past 3 years.
So about INCO, it is already contributing to the profitability since many, many years, not only on standalone basis of INCO, but as Achalbhai earlier explained, on account of exports from Symphony India to INCO, there is a substantial profitability in Symphony India also. Current year also, had it not been the provision for write-off, it would have been profitable despite degrowth. So that is as far as INCO is concerned. GSK last year and current year, certainly there has been an impact of COVID as well as China-US trade war. However, we have taken certain measures, and if normalcy restores, hopefully next year it should at least break even. And about Climate Technology Australia, we have already shared that in March 21 itself, we expect it to be a turnaround quarter in terms of the profitability as well as top line.
Okay, can you just help
the
me?
Numbers
Sorry.
of the last year, even the Climate Technologies had done much better. But were it not for COVID, it would not have been a drain on Symphony's resources, or it would have contributed to the Symphony bottom line as well in the current year.
Okay. No problem. Thank you.
Thank you. The next question is on the line of Renu Baid from IIFL. Please go ahead.
Yeah, hi, good evening, sir. I have 2 questions. So my first question is, if you can have to quantify what was the value of deferred sales both in the domestic market due to stockouts and in the export market because of unavailability of containers there. So what could be the value of deferred sales or sales slipping from 3Q to 4Q?
I think we won't like to disclose the exact amount, but it will be into high double-digit percentage of the sales we have billed.
Sure. Thanks. The second question would be, in general, what we have seen as a trend in the last 6 months, most of the market leaders or brands with strong presence have gained market share either from smaller regional brands or unorganized players. Given that cooler as a category itself has almost 65% unorganized market. So what would be the expectations? There is a base effect here. The season and pre-buying was, as in the off-season stocking was fairly weak. So when we look at the 2021 season, what are the expectations? Can we expect a significantly better than usual offtake because of potential market share gains from unorganized players? What would be your on-ground report in terms of status of some of many of these players who have been operating in the sector?
It's a good question. We believe that not only the unorganized players, but even many of the organized sector players have supply chain issues, and some of the smaller organized sector players have, even I would say, close to folding up, shutting their doors. So this will lead to a consolidation, and we should be the biggest beneficiaries of that when the season arrives. And also, like I said before, our manufacturing has been going on since July, since the unlock, and whereas for most of the other players in the category, they begin only production only very late, just before the summer, so they don't have access to the components that are required at the moment. Everything is in short supply, and everything is very, very expensive. So we had the benefit of manufacturing early at lower costs, which are other players in the industry, whether it's organized or unorganized, will not enjoy. So sum total of all of that, it appears as if that by the time the season comes, we should be in a much better position than others.
Sure. And on the supply chain aspect, because if I remember, we used to import a significant share of the electronic components from China, maybe pumps as well. So as Mukesh Bhai had mentioned, have we now really localized or identified local vendors for these electronic components? And you think this transition might retain or might sustain for longer, or is this more of a transitory arrangement till the time we have the import restrictions or the international headwinds in terms of supply chain?
No, this is more of a long-term initiative. So this is not only to tide over the immediate supply chain issues, but this is part of our long-term sort of strategy to hedge our bets and not only rely on import sources. So for all key components, we are also developing and already have developed alternate sources within the country.
And Renu, in terms of the quality, also in terms of the quantum, and importantly, even in terms of the cost, we have worked out such as it is going to be equally competitive. And not only for Symphony India, but as we shared earlier, even for Climate Technology Australia, starting next year, their part of the sourcing which used to happen from Australia as well as China, it will be replaced from Symphony India. So in a way, we are becoming and will become more Atmanirbhar.
No, I'm sorry, the CTL sourcing will change to Symphony India or sourcing of suppliers based out of India?
Yes, sorry, but it will be built from Symphony India. That will be a top line in Symphony India. And on that top line, we expect margin to be in line with our exports to rest of the world.
even
So
for
we will not
components
only be
which are
no, no, we will not be supplying. We will not be supplying only components. I think that's what you are thinking, Renu. We will be
just give me a minute. What I'm trying to clarify is, we were anyway planning to supply room air coolers to Australia. So that is known and established.
which we are already doing.
Correct.
Which we have already begun.
Yeah. So the point I'm trying to clarify is the supply chain localization which we have done in India versus China. Those supply chain components also will be billed in the books of Symphony India and loaded with margins to CTL Australia? Or they would just be component sourcing?
No. We will not be. No, we will not be supplying components from India to Australia. We will be supplying complete products from Symphony India as far as coolers go. For some heater products, we will be supplying locally made components, but those were basically never made in China. They were basically the manufacturing from Australia is being offshored and brought to India. So as a result of that, we will be supplying certain metal components from India. With a margin.
And that manufacturing will be done through our vendor base in India?
Correct.
Okay, got it, clarified.
So that vendor base has been already identified and organized end to end.
Got it. Right. So this clarifies, because the product range of India and CTL are different, so I was just wondering how it offsets. And lastly, sir, as in you did share as in the broad comments for all the 3 international subs. In any way, can you share at least the 9-month headline numbers for all the 3 subsidiaries?
Renu, it will be unfair because we are publishing standalone and consolidated financials, but we gave a broad outline, so it will be unfair to share selectively. Certainly, by March 21, for every subsidiary company-wise, there will be detailed financial breakup.
Got it. No problem, sir. Thank you so much for answering the questions. Thank you and all the best.
Thank you.
Thank you. The next question is on the line of Vidhi Dedia from Braden Securities. Please go ahead.
Hello. Hi, sir. Am I audible? Yes.
Yeah, Vidhi, go ahead.
Yes. Pardon my ignorance, sir, but just from a layman perspective, as an end user customer, could you help me draw the difference between a air cooler and an air conditioner? Why would one choose an air cooler over an air conditioner? Thank you.
Okay. So for one would choose an air cooler over an air conditioner for, I would say, broadly 3-4 reasons. One is that it consumes far less electricity than an air conditioner does to cool the same amount of space. Number 2, it also costs less to cool the same amount of, the capital cost, the capex is also lower for a like-to-like comparison product. Number 3, it is portable. Number 4, especially in these times when we are encouraged to keep our doors and windows open and live in ventilated spaces, you can't do that in an air conditioner, whereas you can do it in an air cooler. And number 5, especially in dry climate, like let's say the interiors of Maharashtra, the entire Vidarbha belt, or the entire central India, the Gangetic belt, Rajasthan, UP, all of those are dry and hot places. There, an air cooler, in fact, provides much better comfort than an air conditioner does, because air conditioner, in fact, drains out whatever little humidity exists in the ambient conditions, whereas an air cooler actually adds a little humidity, which feels very good onto the skin.
Right, sir. That was very helpful. And my second question is, do we see any structural shift from air conditioners to air coolers because of the above mentioned reasons? Is that happening? Do you see that happening?
No, neither air conditioners nor air coolers, are recent sort of innovations. They've all been around for 50, 100 years. So there is a distinct, I would say, requirement for whether it's all three cooling devices, whether it's a fan or a cooler or an air conditioner. So there are homes which will have, most homes will have fans in every room. They will have air conditioners in a few rooms and maybe air coolers in some of the other rooms. Sometimes air conditioners and air coolers are used in the same room. They'll use the air cooler during the day and maybe the air conditioner at night. So they coexist. So there is, really speaking, they are, they serve to some extent different requirements, and they fulfill different requirements. So it isn't, they are not strictly interchangeable. So they all have a market and a customer base of their own.
Right.
And
Okay, so
Vidhi, in the respect of the runway for air cooler or the potential, the existing penetration of air cooler is about 11%. Air conditioner is about 6%. So for air cooler demand, one is the replacement market of air cooler itself, and secondly, about 80% of the households are having fan or no cooling device at all. So there is also a graduation which happens.
Right, sir.
From a fan to a cooler.
Right, sir. Got it. Thank you so much, sir. That was very helpful.
You're welcome.
Thank you. The next question is from the line of Hussain Kagzi from Ambit Capital. Please go ahead.
Hello. Hi. I had one. So firstly, I wanted to get a sense with regards to the industrial category. So you have said that that's fine, that you wouldn't, it's quite small right now, but where do we see this category being 5 years down the line? I mean, do we have any specific plans with regards to this segment?
Even
in terms of size.
Yeah, well, it's difficult to predict what's going to happen, how this is going to grow and unfold. But we, are convinced that the market is huge. The market is much bigger than coolers for the market for household coolers. And the reason why we believe that is that if you look at it, there are far more number of spaces, whether it is industrial or commercial, in the country which don't have any form of cooling. Then there are spaces which have any that have cooling. So the market theoretically, at least, is far bigger than what it could be for household coolers. The question is, and that is also the case in many other countries, including a country like China or Vietnam. Unfortunately, so far the concept, it is still a matter of selling the concept in the country and educating the users about the availability of this form of cooling. So we are sort of at the stage where we still have to sort of evangelize the concept. And that's what we've been doing for a while. And we haven't really spent big bucks on it so far, but we intend to do that going forward. Now that we have local manufacturing and we know that our supply chain should be able to cope with whatever demand is generated. So we are to cut a long story short, we believe that the market is enormous, and which is why we are committed to it, which is why we have invested in product and all of that and creating the distribution for that. So we have the building blocks in place, and what we are going to be doing next is investing in the marketing and in consumer education.
Thank you. That explains it well. And I just wanted to get a sense with regards to our manufacturing. I know it's contract manufacturing, but pardon my ignorance here. So I just wanted to understand that even though you said that because despite the raw material price hike, we'll be able to maintain the gross margin by launching, because of better product. But still, one is we like any fluctuation in the prices is borne by us, that is, and not the contract manufacturer.
You're not clear. Your voice is cracking. Would you mind repeating your question and maybe speaking a little differently?
Yeah. Am I clearly audible now?
Better now.
Yeah. So I just wanted to know, is whether any price fluctuation, is it borne by us or the contract manufacturer for the price fluctuations of raw material? And second is, and second question was with regards to our debtor days. So, I mean, how much is the outstanding debtor days for the dealers that we provide the material to?
So, again, this thing wasn't very clear, but I think when I think I've got it, I'll try and answer it. The cost increases have not been on account of the outsourced manufacturers, but on account of the raw material increases and increase in the logistic costs. So, was that your question? Does that answer your question?
Yes, that answers my question.
Right. Right.
The line for the current participant has dropped off. We'll move on to the next question. That is on the line of Manjeet Boaria from Solidarity Investment Managers. Please go ahead.
Hi, good evening, sir, and thanks for taking my questions. The first question was, I was just trying to triangulate the market size of air coolers, using the data points we've discussed on previous calls. And if I take FY18 as a good year in the base, where we did roughly 700 crore kind of standalone sales as a starting point, is it fair to assume that given we are 50% of the organized market and the organized market is 50% of overall market, the industry would be closer to 2,800 crores?
That should be, in value terms, yes, that should be about 3,500 is what we believe, because it's not exactly 50% of the total market in terms of value. It is in fact a little less than that. So about 3,500 crores is what we estimate. Now nobody knows for sure exactly how much it is. Yeah, but that's about our estimate.
Right. Sure, and then I have two follow-up questions linked to this point then. As you mentioned, this industry has been around for so many decades, right? And, so have things like fans and ACs been around now. AC is kind of a multiple size of what we are today as an industry, right? AC probably would be north of 10,000-12,000 crores for sure. So, and fans obviously is much larger because it's
but not in value terms, huh? not in volume terms. Volume terms, air conditioners are less than air coolers sold in the country.
I get that, sir. I get that. But I'm just trying to understand, because then, given air coolers are so much more affordable, right? Why didn't they pick up much faster, right? Despite being around for so long. The industry size seems to be, very small, despite it being around for so long, like, around 3,500 crores for a category like this.
Well, it's a function of the economy to a great extent, and if you look at it, the penetration of air coolers is very low in our country, and that the same is true for most other categories in our country. The penetration is very, very low, and as as incomes rise, as disposable incomes increase, as aspirations increase, as propensity to spend increases, people standard of living changes, so people will keep on buying, whether it's an air cooler or an air conditioner or whatever other product. These are all products which are either lifestyle products or products which serve a need. So people who were earlier content with living or sleeping in a hot room will gradually say, we don't want to. We need some sort of cooling device. So it's a matter of changing habits as times go by.
Comfort value and utility value. Right, sir. Right. Sir, so basically this, on this point, just relating a bit more. So effectively, I understand it's a habit change and probably, as you said, linked to incomes which people make, and, you need to be at certain economic level. But then is it fair to assume as an industry, this is probably something which will grow at, 10 to kind of rate, over longish periods of time, given that's how incomes probably will tend up over time. And, at least for the next 4 or 5 years, that should be the long-term industry growth range.
for the total industry, but you have to recognize that of the total industry, about 75% is still dominated by the unorganized sector. So the share of the organized sector would grow disproportionate to the overall size of the industry.
I understand that, sir. I was just asking that as an overall, would the assumption be roughly right that the industry as a whole probably would be a more like 10-12% growth industry? And I understand we'll gain share, so we'll grow much faster.
No, but if you look at historical, this thing, it has been growing at about 15-20%. There have been times when it has grown even higher. It is more linked to the summer and the season.
Right. Okay. Okay, sir. I'll just get on to the next question. When you mention, the penetration of fans in the country, air coolers in the country, ACs in the country, I was just wondering whether that's the right way to look, because, fans would be there even in very cold regions as a basic kind of, room infrastructure, and also be there in very humid regions where air coolers don't really work well. So, is that a like-to-like comparison when we look at penetration, or should we adjust for the penetration number accordingly when we make a relative comparison?
So see, fan is, like you rightly said, a fan is part of your standard fixture of most homes and every room. But coolers are like air conditioners. People will use them where a fan is not enough, where you need cooling. See, a fan at the end of the day is not reducing the temperature; it is only churning the air. Whereas an air cooler or an air conditioner actually reduce temperature. So they will be found in homes which are or areas which are hot, and even not only dry, because even in a place like Bombay we sell significantly high quantities of air coolers, or a Chennai or a Kerala or a Goa. So it isn't as if the sales of coolers is restricted to dry areas. Dry areas have much bigger markets, but even relatively humid areas also have significant sales of coolers. We sell coolers even in countries like Sri Lanka or the Philippines, which are islands.
Yes, yeah. Well, right.
And humid.
Okay. Sir, one final question was the industrial and commercial air cooling side. Is it possible to give a sense on what are typical order sizes, in this segment, when you take on a project? Is there a rough blended range which you have seen in the past?
No, first of all, we don't take projects. We are, we produce the cooler, and we sell to our channel partners who in turn execute projects. So if you, in your office in Bombay, if your management decides to move to a new office and air condition the whole office, it is not as if a Daikin or a Mitsubishi or a Carrier is going to come and do the execution themselves. It will be some installation partner, some channel partner who will do the installation, buy the coolers or the air conditioners from the company, and invoice to the client, to the customer. So the same thing happens in our case. So we sell our product.
Sir, sorry, I'm going to interrupt you here. I'm very sorry about this. I framed the question wrong, right? I get where you're coming from. What I meant to ask was, for any project, right, where our coolers go, is there a typical size in industrial and commercial air cooling?
Okay.
Just to get a sense of, how this scales up.
Okay, fine. So it can be, as small as a lakh or lakh 20, and be as high as 2.5 or 3.5 crores.
Right. So basically, sir, where I was trying to understand this was, for us, in the past you have indicated, obviously over a period of time, right? It's still early days, but this is a category which can be as big as, probably our, residential air cooling. And when I think about that and the ticket sizes which you have just mentioned on a project, it seems like, you'll have to do almost 600, 700 projects a year, in terms to hit that number. Is that a fair assumption?
That's a fair assumption. Yes.
And sir, typically in India, how many such projects which are addressable for us, as a customer base take place today, just to get a sense of that overall market?
Sorry?
So today in India, how many such projects are, typically how many such projects take place in a year, I just want to understand what percent of the overall projects we will be if we start hitting 600, 700 projects a year.
No, we don't do projects like I said, so we have no idea about where they are going. So we don't know how many projects are being done. We only know how many coolers are being sold.
Oh, very clear. So we'll basically have to sell for around 600 to 700 projects in that sense to hit the 600, 700. Very clear, sir. This was very helpful. Thank you.
Thank you. We'll move on to the next question. That is from the line of Naveen Trivedi from HDFC Securities. Please go ahead.
Yeah, good evening, everyone. Sir, you had mentioned that new products will be launched close to the season time. So is there any update on the same?
That's happening.
Okay. Maybe if you can just give us some sense about is it happening in the premium side or mass premium side or at the entry level sort of a price point?
I wouldn't want to get into that.
Fair. Just lastly, on the export side, since lots of cross-selling opportunities have been emerging for our export business. But if I look at the last 2-3 years, our annual export sales is close to 55-60 odd crores. So can we expect that over the next 2-3 years time frame, this number can become a significant number?
This in the next 2-3 year time frame, we expect this number to be significantly higher in multiples of this, not just percentage, but in multiples of this. Once all the Australia and the US business, kicks in.
Sure, sir. Sure. Yeah, that's all from my side. Thank you and all the best to you.
Thank you. The next question is from the line of Hiren Trivedi from Axis Securities. Please go ahead.
Yeah. Thank you, sir, for the opportunity. Just wanted one small question on the top line for FY21. So you had earlier indicated that in some previous call that it would be probably similar to FY19. So does that still hold good, or is there some improvement over and above that? And secondly, how would you see the growth for FY22 with the expected normalcy returning in the business? And lastly, what would be your sales on the online sales out?
No, I didn't exactly get your question.
Yeah, sir, I was asking about the FY21 top line. So in previous calls, you had indicated that it would be similar to somewhere in what had been achieved in FY19. So does that still hold good, or is there some improvement over and above that? And secondly, how would you see the growth for FY22 as a whole with the expected normalcy returning in the business? So would it be, as indicated in the previous question, that your coolers industry is growing at around say 15 to 20%? So would you be beating that kind of growth for FY22? And lastly, the online sales, what is the percentage of online sales that you are currently having?
So for March 21 on a console basis, it should be by and large in line with FY19. That is number one. As far as 21-22 is concerned, subject to reasonable summer, we do expect quite decent growth on standalone as well as console basis by maintaining the current level of profitability margin. And of course, in terms of EBITDA margin percentage, as scale improves, it should improve. And for March 21 quarter, as we said earlier, on standalone as well as on a console basis, we do expect a significant traction and much better quarter. We expect the quarter to be almost normal in terms of the business.
Thanks, sir. Sir, and what about the online sales, that initiative that you had started?
So our organized retail sales, or large format retail sales, which includes online sales, is about 15%. But we won't like to give the breakup between the large organized retail versus e-commerce. But certainly it is getting a traction, and year by year it is registering very healthy growth.
Thank you, sir. That helps. Thank you.
Thank you. The next question is from the line of Rahul from Haitong Securities. Please go ahead.
Yeah, hi. Good evening, sir.
Yeah, good evening.
Sir, I've got a couple of questions. You did indicate, inventory levels are better and now more manageable. Is it possible you could highlight, the advances received till December, and how does it compare to the same period last year in value terms? Is that something that you can comment on?
So about absolute amount of advances we received during the off-season, we don't disclose or share with. What is reported is the amount billed or sold, which is already reflected in our financials. However, to give some broader idea, in December 20 quarter, the overall trade collection has been almost comparable to December 19 quarter.
Okay, the collection was similar to last year.
That's right.
My second question is, in the consumer durable appliances, there has been a steady shift that we have seen, from unorganized to organized. Given high share of unorganized players in the coolers industry, have you seen similar shift in air cooler, especially in the backdrop of events like supply chain disruption, which is slightly difficult for unorganized players to manage compared to large players like Symphony to manage?
So, irrespective of these reasons, there has been a continuous shift from unorganized to organized. Say about 7-8 years before, volume-wise, organized industry was contributing 10 to 15% of the total volume and unorganized about 85%. Now it stands at about 30%, 70%, even though industry itself has grown substantially. So on account of increased aspirational level, rising income, more and more awareness, availability of the product even in rural and semi-urban market, there has been a shift. And the reasons what you mentioned or even earlier we shared, I think they should further add to shift from unorganized to organized.
So my last question is, Mexico has been a great example of generating tremendous value for the stakeholders. You set up a subsidiary in Brazil. Can you throw some light on the opportunity there, the size of the market, competitive intensity, some thoughts on how you want to take the Brazil market? Thank you.
Brazil, you will say Brazil market?
Yes.
Okay. So it's a fairly large market, but Brazil is a very complicated market to operate in. So the typical export model did not work for us, which we tried for many years. So that did not give us. We were not able to scale up in the typical export model in Brazil because of various tax and those kinds of complications, which is why we have established a subsidiary which imports from India and then distributes locally, because we believe that the market is substantial, and we are importing coolers into Brazil both from India and from China. Some of the industrial coolers from China, some of the household coolers and commercial coolers from India, and it's a large country and one of the largest economy in Latin America. So we believe that over time we should be able to develop it into a significant business, and it has been one of our larger export markets even from India. But like I said, the potential is much higher, and we felt that by having feet on the ground we can scale up much sooner, which is why we did that.
With a small base, we already broken even.
Sure. Thank you, sir. That has been very helpful. Thanks and all the best.
Thank you. Thank you. Thank you.
Thank you. The next question is on the line of Ankit from Shubhkam Ventures. Please go ahead.
Yeah. Good evening, sir. So just a confusion which I want a clarification on. So you mentioned that the current quarter, that is the Q4 FY21, so your revenues would be better than Q4 FY20 on a standalone basis?
No, we haven't said that, have we? Bhupesh bhai, please go ahead.
No, we haven't quantified the number, but as we said, considering the overall sentiment, traction, and kind of the trade interest, we are quite optimistic.
Okay. And sir, assuming that the season is normal, so is it fair to assume for us that next year would be better than FY20?
Next year will be better than FY20. Yes, you can. It will be safe to assume that.
On a standalone basis.
On a standalone basis, yes, it will be safe to assume that. It should be at least equal to FY20.
Okay. Okay. And at those levels, I mean, will we be back to those 30% kind of margins which we used to do at EBITDA level?
Absolutely. Absolutely. Because our EBITDA, as Bhupesh bhai explained before, is a function of the top line. Nothing else has changed.
Okay. That's it from my side. Thank you.
You're welcome.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to the management for their closing comments.
Thank you all the participants for sparing your valuable time, and thanks to MK for hosting this conference call. Stay safe. Thank you.
Thank you. Ladies and gentlemen, on behalf of MK Global Financial Services, that concludes this conference call. Thank you for joining us, and you may now disconnect your lines. Thank you.